So, Jeff, let me start with you because if I'm not mistaken, you're bullish on the banks here?
Well, I mean, I think you can buy banks here, but I think more importantly, you want to look at European financials. They've outperformed U.S. financials by 10 percentage points. And it's true internationally overall. International stocks are outperforming today. They outperformed last week, year to date, and last year as well. It's what we call a trend in this business. And I think it's when you want to focus on low price to cash flow companies, including in financials, outperforming.
I'll let you probably can say this faster than I can bring up the chart, but I was going to ask Jeff, how good of an investment have European banks been over a 5, 10, 15, 20-year period of time?
Oh, they've been awful. And one of the reasons for that is the fiscal austerity in Europe that weighed on them for a long period of time. So many different problems as they rolled through the European debt 2011 and 2012, but we've started a new cycle, and new cycles mean new leadership. For behavioral and fundamental reasons, European financial trading at 6 times earnings. And they're actually, the data that we're seeing is actually encouraging as it relates to the economic front. We just got the German IFO data today. That's an assessment of the German economy. Came in not only better than economists expected, but better than any time in the past year, showing improving economic momentum. I think the concerns are going to return to inflation and growth being too strong, rather than worries about a financial crisis.
One more question on this, Jeff. Are these trades for you kind of an opportunistic, get in, get out quick as sentiment improves? Or do you now think these companies are investable for a year, a couple of years, a longer period of time?
Yeah, the latter. I do think this is a longer period trade. I shouldn't even say trade, an investment. I think, again, focusing on low price to cash flow and international equities out of favor for a long time, a real opportunity for long-term investors.
Peter, I know in the past you've talked about looking at maybe some energy names, if I'm not mistaken, in Europe. What about the banks here?
Well, the European bank stock index is down about 75% from its peak in 2007. And most of the big ones trade well below book value. So there is tremendous value there. It's just a question of whether it's going to be realized anytime soon. But I do agree. I think there's a bastion of value to be had there. And finally, European banks have positive nominal interest rates. I mean, negative interest rates was a killer for European banks. It was a tax on capital. And just having some of the yield curve in positive territory would be beneficial to European banks. And to your point about energy, the large European energy companies are trading at half the value as U.S. ones. So we like those as well.